Welcome everybody to the 40 Finance channel. Today we're going to be looking at DraftKings stock here in 2023. This is a stock that I own, but I also cut some of my holdings with DraftKings heading into the end of last year for some tax loss harvesting. But right now I've got 100 shares at $28 a share. And I believe prior to the time that I sold, I was right around 200 shares up to like $39. Cost basis on that total. So brought my cost basis down, got some tax loss harvesting out of it. But here we are in 2023, and this stock is having a great beginning to the year, plus 60% since the start of trading in 2023. So the question, as always, is, how much higher can DraftKings stock go? This stock's a lot different than some of the others I talk about, mostly QQQ and NASDAQ stocks, where we get into fundamental valuations, looking at earnings per share. None of that here. No earnings per share, not expected to be profitable for another 2, 3, possibly even 4 years. This one is about revenue growth, market share growth, as the U.S. Sports gambling market continues to grow. All right, so DraftKings, I think right now is in 18 states the last time I looked. That obviously leaves 32 states to go. Some of those states will never figure out a way to pass. So let's just say that there's 22 states to go. That is still twice the size of where they are today. And even on that broad estimation, that's still more states out there than they're live in today. So that's one of the reasons I did hang on to a portion of my investment. And also, I've talked about it before, but I live here in Ohio. DraftKings just launched in Ohio on January 1st. It's a platform that I've done a lot of the daily fantasy in the past. So I'm very familiar with the ins and outs of DraftKings. And the one thing I will say before we jump into the stock evaluation is, the platform for me is infinitely better than the competitors on the market. We'll look at those competitors, but the biggest one is FanDuel. And if you want to talk about ease of use, ease of logging in, all those things, not to mention the rewards and incentives that you get through DraftKings versus FanDuel, if you compare all those things across the board, I think DraftKings, at least from my experience, is in excellent position to continue to grow market share. Now, let's talk about the only thing that probably matters with this stock, and that is revenue growth. Here's a great chart here from Seeking Alpha. And by the way, as we're going through here, if you want to learn more about Seeking Alpha and some of the tools that I use on my channel every single day, my affiliate link is in the description. You get 50% off your first full year of Seeking Alpha Premium. It's about $10 a month is what it comes down to. So if you're interested in checking that out, potentially supporting my channel, look at the link in the description. All right, annual revenue growth. All right, so 2021 is in the books. Some notable states came online in 2021. 2022, the current estimate, which has been revised upwards, I think each quarter by DraftKings, is coming in about $2.2 billion. So they added another $1 billion to 2021's total. However, there is, of course, expenses and costs as new markets open, so it's not necessarily an earnings story, but it is a revenue growth story. Then you get into the estimates for 2023. We're going to learn more about these very shortly when they report their earnings, but right now people have them right about the $2.9 billion mark. Honestly, it wouldn't surprise me if they end up over $3 billion by the time next year is closing. But, that's just a dart throw number for me based on some of the action that I'm seeing in the industry. Okay, the next big event for DraftKings is going to be right here. Post-market is when they are releasing their earnings for the past quarter, and that's likely where they will also provide guidance for 2023. That's going to be big. A lot of analysts want to know, which states are coming online, how much more money and market share can this stock put together, and that will really kind of set it up for where it's going to be for the next 3 to 5 months on this one. don't forget, when we get out of basically March, April, once you get out of the NCAA tournament, sports betting volume goes down significantly. You still have golf, you still have baseball. Some people do like NASCAR and stuff like that. For me, it almost ends completely, particularly once the NBA is done. And then I, kind of walk away and pick things up again when the NFL starts. So DraftKings will have a lull in their stock price during summer. Okay, so that's just the way that industry is. And then as we head into August and Labor Day and the talk of football starts to rise back up, you'll see Jason Robbins, the CEO, and people start talking about the stock again because everybody's excited for football season. Now, one thing I wanted to highlight here on the revenue estimates, just to get in a little bit more closely, we talked about the $2.9 billion for 2023. The low is $2.5 billion, and the high is $3.1 billion. So you heard me say I think they get to $3 billion and above. That's just my take. You've got 30 analysts covering it, so it's not necessarily like a ridiculous number. Okay, so when you have a company like DraftKings that's a relatively new company, it's moving into an emerging market in terms of U.S. sportsbook gambling, it can be hard to figure out where this all lands in the future. One of the only reasons that I invested in the stock is because I was familiar with the platform and I knew Ohio was coming online. So it was half novelty, half me feeling pretty good about their products that I have interacted with. But if we really want to go look at where revenues and earnings per share can go over time, then you have to compare the stock probably to Flutter. So Flutter Entertainment is actually a European company. They used to be called Paddy Power, I believe, and in fact their ticker is still PDYPY. But Flutter owns FanDuel, okay? And FanDuel right now is the market leader in the United States for online sports betting, right? And then you got DraftKings right behind it. But if we look at some of the comparisons with Flutter, even though it's an international company that's doing a lot more business than DraftKings, you start to get the idea of, where could this stock end up maybe, say, in 5-6 years. You scroll down here, I got a 5-year chart. This is just for straight price return. Paddy Power, or Flutter, I need to call it Flutter, has had a 42% return over the past 5 years. You can shrink that down a little bit to 3 years. It's at 43%, PENN's at -9, DraftKings at 10.5. Now with Flutter, you actually have an EPS. We'll take a look at some of those metrics. It's going to be a totally different valuation. So let's get into that. We'll stop here on somewhere here. Valuation. So DraftKings not going to qualify for any of this. If you want to go to PE non-GAAP over the last 12 months, PENN's at a 17 times. They don't have one listed for Paddy Power, but PE GAAP forward, PENN's is going up to 22. Then we see a 340 on the Flutter side. From a PEG ratio standpoint, you got a 2 or so for Flutter on that one. Now we're talking about the growth story. Okay, and this is where I think it gets, pretty interesting for DraftKings. If you go revenue growth year over year, we've already talked about it, revenue growth forward, these numbers in the 60 percentile. All right, PENN, you're at single digits. Now, with PENN, on the bright side, this looks bad with single digits, but PENN is a bigger company. Barstool's one aspect of their company. PENN also owns physical casinos, all right? And that's one of the reasons that I like DraftKings as much as I do as a stock is because they do not have these physical casinos. Typically, they're doing licensed plays where they just have their sports book with their name on it, but it's really the other casino. It's really sort of a partnership for brand recognition. Now, on the Flutter side, much, much more mature company. They've got revenue growth year over year at 7%, and then forward at 14%. And then if you want to get into EBITDA growth looking forward, it's basically flat for both of these. Again, every time a new betting market opens, there's a lot of outlay, right? It's expensive to come in and win the customers. I have a feeling that that's what we're seeing here. Okay, and then lastly, if we just stack up our income statements to get a feel for where DraftKings stands, revenue, $1.86 billion, okay, versus Penn is in $6.4 billion, and Flutter at 7.76. So realistically, while it's not easy to double your revenue all the time, DraftKings really isn't that far away. If they get to $3 billion, Penn will certainly grow this year, as will Flutter, but they're making big chunks towards being a force that's on the same par as these other guys. Now, DraftKings has more shares outstanding, so you see the revenue per share is significantly different, but they all have different stock prices, so it kind of balances itself out. If we go down to balance sheet in the most recent quarter, you know, one of the things you're going to hear is how much outlay it takes to win in new markets. Well, DraftKings, $1.3 billion, okay, cash per share, $3. Their debt, $1.33 billion. All right, so they've got about as much cash as they have debt, which is not a horrible place to be, particularly when you compare it to these operators. All right, so Penn's got, you know, about the same amount of cash. So does Flutter, a little bit more cash than DraftKings. But look at these debt loads with operating physical casinos and going through COVID where nobody was staying in hotels and eating food and stuff like that. Penn's at $13 billion, you know, Flutter's at 5.25. From a ratio perspective, DraftKings is in better shape there. All right, and one more thing on DraftKings here, and this comes from the press release that they put out in their last earnings, the third quarter earnings, you know, roughly in November or so. So we'll have to see what happens here on February 16th. They expect a fiscal year 2022 EBITDA loss of $800 million to $780 million, okay? And that was coming down. So that was, you know, I know it's ugly, but there was some momentum to that. At the same time, as they projected ahead for 2023, again, this is back in November, they introduced fiscal year 2023 revenue guidance of $2.8 billion to $3 billion. So remember when I said I bet you they hit the $3 billion, you kind of get that point here, especially since the momentum right now seems to be very good. And they also talked about adjusted EBITDA guidance of a loss between $575 million to $475. So again, not the ideal situation, but we knew that this was a losing game anyway in the first few years. But what you're seeing, depending on where this all lands, is, you know, they're chopping, what, 30% off of EBITDA losses in 2022 in 2023 while also raising revenue 33% And I think they outperform on the revenue side. We'll have to see how they do on the EBITDA side. All right, so in terms of where DraftKings stands today, I really like their positioning. And I can tell you as a user, I like their products, and I've compared them to other people's products, and I think that they're just flat out better. But with that in mind, this isn't a sure shot stock by any stretch of the imagination. But now that you've had a significant rundown like we saw last year, and it's kind of popping now to that $17 range, I think the good news for DraftKings in terms of revenue growth and market growth continues to unfold. There'll be a lot of doubt behind them, and you're going to hear a lot of people say, you know, you should invest in Flutter as opposed to DraftKings. But I think from a stock returns perspective, if DraftKings simply hangs on to some of these momentum headlines that they're getting right now, I think they easily outperform Flutter over the next 1 to 3 years, maybe every single year in the next 1 to 3 years, just because they're being measured on a different level than what Flutter is. Don't forget, before you go, to check out that special offer for Seeking Alpha Premium in the description. Hope everybody's doing well. We'll see you on the next video.